Hello, and today I'm going to be doing Cashflow Quadrant by Robert Kiyosaki. Industry average. In the banking industry, a 7-year average is used as the life expectancy for a mortgage. That means banks expect the average person to buy a new house or refinance every 7 years. And that means, in this example, they expect to get their original $80,000 back every 7 years, plus $43,291 in interest. And that's why it's called a mortgage, which comes from the French word mortier, or agreement until death. The reality is that most people will continue to work hard, get pay raises, and buy new houses with new mortgages. On top of that, the government gives a tax break to encourage taxpayers to buy more expensive houses, which means higher property taxes for the government. Every time I watch television, I see commercials where handsome athletes smile and tell you to take all that credit card debt and roll it into a bill consolidation loan. That way you can pay off those credit cards and carry a new loan at a lower interest rate. They tell you why it's financially intelligent to do this. Because a bill consolidation loan is a smart move on your part because the government gives you a tax deduction for the interest payments you make on your home mortgage. Viewers, thinking they see the light, run down to their finance company, refinance their home, and pay off their credit cards and feel intelligent. A few weeks later, they're shopping and see a new dress, a new lawnmower, or realize their kid needs a new bicycle, or they need to take a vacation because they're exhausted. They have excellent credit, they pay their bills, their little heart goes pitter-patter, and they say to themselves, "Oh, go on, you deserve it. You can pay it off a little every month." Emotions overpower logic, and their credit card comes out of hiding. As I said, when bankers say your house is an asset, they're not lying. When the government gives you a tax break for being in debt, it is not because they're concerned about your financial future. The government is concerned about its financial future. So when your banker, your accountant, your attorney, and your teachers tell you that your house is an asset, they just fail to say whose asset it is. What about savings? Are they assets? Now, your savings really are assets. That's the good news. But again, if you read financial statements, you'll understand the total picture. While it's true that your savings are assets, when you look across town at the bank's balance sheet, your savings show up as a liability. This is what your savings and checkbook balance look like in your asset column. So, assets, your savings, your checkbook balance, liabilities, nothing. And this is how your savings and your checkbook balance are carried on your bank's balance sheet. Assets, nothing. Liabilities, your savings, your checkbook balance. Why are your savings and checkbook balances a liability to banks? Because they have to pay you interest for your money, and it costs them money to safeguard it. If you can grasp the significance of these few drawings and words, you might begin to better understand what the eyes cannot see about the game of money. "I'm glad you entered the game," said Rich Dad, "but because no one has ever told you what the game is, you've been suckered over to the losing team." Rich Dad then explained the basics of the game. The name of the game of capitalism is who is indebted to whom. Once I knew the game, I could be a better player instead of someone who just had the game run all over them. The more people you are indebted to, the poorer you are. The more people you're indebted to, the poorer you are, said Rich Dad. And the more people you have indebted to, the wealthier you are. That's the game. As I said, I struggled to keep my mind open, so I stayed silent and let him explain. We're all in debt to someone else. The problems occur when debt gets out of balance. Unfortunately, the poor people of this world have been run over so hard by the game that they often can't get any deeper into debt. The same is true for poor countries. The world simply takes from the poor, the weak, and the financially uninformed. If you have too much debt, the world takes everything you have, including your time, your work, your home, your life, your confidence, even your dignity, if you let them. I don't make the rules, but I do know the game, and I play it well. I'll explain the game to you, and if you want to play. Then, after you've mastered the game, You can decide what to do with what you know. Okay, I hope you liked that. If you did, please like and subscribe. Bye!